Test, test, mic check, mic check. All right, 12 o'clock now. Just wait about 30 seconds here. All right, let's get at it. It is December 1st, 12 o'clock Eastern Time, and it is time for my weekly market update. First, a quick disclosure. I am a registered associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Quick position disclosure as well. I think I got about 16 positions on. I literally just hit a small short position in the SPYs right before starting the webinar. Just market's feeling a little heavy to me. It's slightly extended, not too much, but we'll see if we get a little bit of a rollover here in the afternoon or not. Besides that, got a bunch of longs on, got a few shorts on, continuing to kind of manage these positions. I'll be talking about the market. I'll be talking about a lot of charts as well here in just a couple of minutes. Quickly about my background. If you've been following the webinar every week, you know me by now, but I am senior trader at T3 Trading Group and registered principal. I've been with T3 in one form or another for over a decade now, really since 2010. I've been a licensed trader with T3 since 2011. I've mentored well over 100 professional traders for the firm, currently managing a group that is probably closer to 100 traders around or so at this point, definitely in excess of 50. In my spare time, I'm big into martial arts, big into skiing, and big into traveling. And if you've been following along with the webinar each week, I've really been getting around the country a lot this year. It's been an incredible year. Right now I'm in Lake Tahoe. It's beautiful here. Unfortunately, there's sun every day in the forecast. You'd think that that's something you would not be upset about, but I want snow. I want snow for the ski mountains here. I already got 8 days of skiing in this season, and it's only December 1st. Normally I'm out on the East Coast, feeling really bad for my East Coast friends because they're having a terrible start to the ski season. If you want to reach out to me at any point, again, I'm going to be talking about markets today. I'm going to be talking about T3 Trading Group, T3 Live, professional proprietary accounts at T3 Trading Group, retail accounts at T3 Trading Group. If you want to reach out to me about any of that stuff, if you want to talk to me about skiing or the Mike Tyson Roy Jones fight, shoot me an email and I'm happy to chat. All right, let's go to the charts. All right, for anybody who was here last week, I was seriously pumped up. Because, well, first of all, if we're just looking at the daily technicals here, the SPYs, things are looking bullish. But what things had me really pumped up about was the fact that we are seeing stocks move 100% plus at a time in like a week. It would I've almost never seen anything like it before. Last week we identified all of these stocks that had basically had moves between 50% and 200% over the course of like 1 to 2 weeks. And there's tons of them out there right now. We were looking at this fuel cell, right? This fuel cell move is insane. Just a couple weeks ago, it's at $2.50, and next thing you know, look, my chart doesn't even want to go that high. It gets all the way to above $11. We were looking at this BLNK. Stock was a $10 stock. Next thing you know, stock is at $35. We're looking at XPEV, Chinese company, right? Beautiful little bull pattern in here as it continues. 25 bucks less than a month ago in the beginning of November, given this move all the way up to $75 just about 3-4 trading sessions ago. We were talking about Palantir. Palantir had this insane move as well. Broke out from $10, not even, on the 1st of November, a little bit after that, and ripped to $33.50. When was that? 2 trading sessions ago? I think this was the Friday, the half day for the market. Just completely nutty. We were looking at Candy, which had also just an insane move. $8 up to $17.50. We were looking at Plug, right? Plug, great move, has a secondary announcement here. Secondaries usually crush stocks. This thing barely batted an eye. It blinked down for a day or so. I actually took a short after hours that day, basically covered the position within a day or two, got out of it for a few bucks because the name was just too strong. Even from that secondary rip from $22 to $29. Even obviously a more real company. Well, what we can debate the merits of what real actually is. Tesla. Tesla gets added into the S&P and then just goes on this rip-roaring move. Definitely not the first time we've seen Tesla do something like that, where it just rips from $400 here in the middle of November to $608 as of yesterday's trading session. Just one stock after the next, having these insane moves. And the thing that we talked about is that the market almost doesn't seem to care what some of these are. Oh, and I didn't even get into the Bitcoin, right? Bitcoin and Bitcoin-related companies like Riot, which went from $4 to basically hit $9 this morning. For some of these companies, it makes sense. NEO, we've spoken about. This is a real company. NEO is a very real company. The Chinese, it's a Chinese electric car vehicle manufacturing company, if people aren't aware of that. This is the big competitor to Tesla out in China. One of my good friends just purchased a NEO. He's located in Shanghai. He loves it. He's sending me a video from inside saying, "Hey, Derek, this car is awesome. It's just like having a Tesla, except it's half the price." And also, if you're a Chinese citizen, the same way here in America, people like to buy Ford and General Motors because they feel like they're buying an American brand. Well, out there, people are excited to go buy NEO as the Chinese competitor to Tesla. This is a very real company, had an incredible move, and we've been on the long side of most of this move, right? The thesis on the stock changed here in July. There's actually a short trade that we took here in July that paid pretty well for a few days, and then started seeing all this new information about what was going on with this company, and then the technicals were just confirming it, right? Bullish pennant breaks to the upside, bullish pennant breaks to the upside again and again, basically trading all of those. I think a week or two ago, I highlighted flipping short NEO on this day, on November 13th, the highest volume day in NEO I think ever. Pre-market just extremely extended. Even though I'm big picture a NEO bull, this move's getting ridiculous. This degree of extension is getting ridiculous. We're able to flip short. Traded it very actively today, in that day. The volatility was fantastic. Also traded it pretty actively today as well. It's totally been on the radar, even though it's actually breaking down a little bit. It's a little bit of a different picture. But what we were talking about last week was patiently waiting for the right time to short some of these companies, because whereas NEO is a real company, I was saying even before, the reason why Candy Eye got cracked so bad yesterday is because one of the big short selling companies, it wasn't Muddy Waters, it was one of the other ones, I'm blanking on the name right now, came out with like a fraud report on them and that they're short. But I had already been saying that this was a borderline fake company, but the market hasn't cared. You got these companies, some of them are real, some of them are like borderline fake, and they're all moving 100% plus at a time. I love that price action as a professional trader. It's two-way price action. You can really make money on both sides of it. What I always caution is that you got to be careful. Moderna today is one that we were looking at to the short side. into this same thing. It's just into this degree of extension with this gap up. Now you got to be really careful shorting stocks in the face of momentum. And a great example of that is JKS. When this JKS first started ripping here in September, you could have looked at it in 40 and been like, oh my God, this thing was just at 20, now it's at 40. It's gone up too much too fast, I'm getting short. And then next thing you know, it's even more extended at $63. And the next thing you know, it's even more extended at $87. So you can never just look at a stock and just go, oh, it's up too much, I need to get short. That's not what the right thought process is. The thought process is that we are measuring where the market is taking these stocks. We're measuring degrees of extension from equilibrium. Technical equilibrium, my definition of it is the space between the 8 and 21 EMA on any time frame that you're looking at. So we're measuring these degrees of extension to understand the potential of where stocks could pull back to, and then we are looking for low risk entries to potentially short when they do get ridiculously extended, and ideally we're shorting them already on the way down. I'm not shorting it on the way up and trying to pick a perfect top. I am shorting it on the way down versus a level so that I have clear defined risk to potentially get daily chart reward. And once again, that is like my whole trading philosophy, or one of the key points of my trading philosophy is looking for places where we can get intraday risk for daily chart reward. So when JKS is at, let's choose an example that doesn't work. Maybe it's this morning. You're looking at it at $77 and you're saying, okay, this ADMA is at 70. There's a potential I could get $7 of downside here. And you're able to find a spot to short for 30 cents risk, 50 cents risk. Guess what? You probably got stopped out and lost money. If you had a good game plan, maybe it's a break-even trade, which is something that we really focus on with my team is appropriate game planning for your trading. And guess what? You get stopped out. But if you were shorting it on the way down versus a level, because you have a setup, you put yourself in a great risk-reward opportunity, and then those trades can potentially work out. And it's just really been Jumai was another one. Look at this, we can't even see the top of the chart. One of the guys in my VTF room on my team was calling out this Jumai short through 40 bucks. Same thing, into this degree of extension. You're able to come in there, you're able to get 50, 60 cents risk for reward down to potentially 30. $10 worth of reward. That's a risk reward ratio of 1 to 20. That's exactly what we're looking for. Then obviously what helped the short traders, the announcing of the secondary offering, and it's giving even further continued weakness at that point. Palantir. You got people, I don't really use Reddit, but people are in my VTF are telling me that you got guys in the Wall Street Bets Reddit basically saying that they're putting their life savings into Palantir when it's breaking above $30. Well, if that's not a signal of euphoria, I don't know what is. And same thing, just this extreme degree of extension into this 33.50. We were actually able to short it through $33 on that day, for again, a pullback to where? This is all you can really ask for, was this pullback to 24. Could it go further? Citron thinks it's going to 20. Could it happen? Yeah. I mean, that's still within the equilibrium area. It's obviously pretty heavy today. I still have a short position on, of which I've at this point covered a lot of, but I'm still in it to see if we can get some further follow through to the downside. But these moves are so crazy, and it just creates massive amount of opportunity. This is exactly what we want. Tesla has been a big idea here the last couple trading sessions. At first, I really thought that this day, 2 trading sessions ago, was going to be it. I thought that this was going to be it. Finally got a little bit of a topping tail. Just didn't have the confirming volume that I would want into $600. But again, the degree of extension here was insane. Stocks at $600. My upper band of equilibrium, this ADMA, is at 523. Lower band of equilibrium is at 477. There's great potential risk reward. And then what happened? The next morning, it had positive news. It had positive news out of its Shanghai plant. And the stock was set to gap up that morning. Pre-market is trading above $600. Market opens, trades instantly right back through 600 bucks. And again, we were able to see how heavy this stock was right in the beginning of the day on a potential failed breakout through 600. Now here is a really important sign, and I've noticed this my entire trading career. when you're looking at a stock and it's had a big move, and then all of a sudden it starts reporting good news, but the stock can't go up any further on that good news, that's a big signal that it needs to take at least a long pause, or is potentially even done. The opposite is also true. You're looking at a really weak stock. Maybe you're looking at energy, which energy is another one, this XLE. My team and I have been very focused on really since early November. We've been talking about the rotation from tech into value over the course of the last few months here on this webinar almost every week. We see this XLE pick its head up. We see this bullish pattern that it builds out here. And I wasn't involved in this one personally, but a bunch of the members of the team are capturing this move to the upside. When you're seeing something that's really weak, trending down, and I mean, these energy names have been dogs for just so long now, just down and down and down and down. And then when you see more bad news come out and they don't go down anymore, that's a signal. It's something that you want to pay attention to. So going back to Tesla, we're able to identify the failed breakout in Tesla yesterday into this 600 bucks, short it back through that area, and then capture this whole capitulation all the way down to 555. It was an incredible move. We knew after hours yesterday that Tesla, 5:15 p.m. Eastern, the S&P was going to be announcing how they're implementing it into the S&P, which, by the way, has been the catalyst that has led to this massive upside move. So how are they going to implement it into the S&P? Is it going to be over the course of just one time, which is how it's traditionally done, or are they going to break it up into a couple days or a couple quarters? And they announced yesterday that they're going to do it all at one time. And the market, I was really surprised. I honestly thought it was going to be a non-event. And the market ripped after hours from where it closed down here at 560, 750, ripped it all the way up to like 598 after hours. I was trading in after hours. You know, if you have a retail account or a professional trading account here at T3, your market hours are 4 a.m. to 8 p.m. It's not unusual that I'm placing my first trades at 5:30 a.m. Eastern. It's not unusual that I'm placing trades all the way to 8 p.m. Eastern, especially when things are really rocking and rolling. But I was trading Tesla till fairly late yesterday. Was reshorting, you know, again, shorted pretty heavily up here at 600 bucks, traded it very actively, but was covering my positions all day, covered more of it into the week close yesterday. Next thing I know, it's up at 597 after hours. I'm reshorting it versus where? Again, because every trade has to have a game plan, has to have a stop loss, has to have an out. Well, really, the only reference point is that high, which is now the all-time high of 607.80. So really, I knew after hours, it created some after hour resistance around 598. So my expectation was that the entire area between 598 and 607 would potentially act as resistance in Tesla. And I wanted to see if once again they would sell it on this news. So I shorted some after hours yesterday, I shorted some more this morning, and then once again, we were able to capture this movement here to the downside as it was very weak. Bounced a little bit. Now we'll see how it closes. It's really important for this stock, if you're bearish, to give a weak close. If it gives a weak close today, perhaps it's an inside day, but it's a weak close, you're setting up for an inside day and down, which could potentially bring this thing back deeper. Maybe it sees 525 again. If they close it pretty well today, if they're able to rally this thing into the close, well, for me as someone who's currently short, I'll have to take a step back and go, okay, you know, maybe that was it. Maybe that was just the move. It was just, you know, 2 days of price and time correction after massive extension, and now what is otherwise a really bullish stock is set to continue. So that is that. And then as far as the market itself goes, I know I skipped right over the market today. SPYs are so bullish. They're so bullish looking. Now we have some concerns. Some of our sentiment indicators have been and remained really overcooked to the opposite side, which would be a bearish indicator. But that's not as important as the technicals itself, and the technicals itself are really bullish. If you guys recall, we were long going into the election, and then on the Monday, the Pfizer news, flipping short. Why? Because of the degree of extension. This was the Pfizer day, right? All the way up here, huge volume that day, but that degree of extension after this move, great opportunity to flip short, to look for a price correction. We price corrected down to 350. Since then, we've really been building out this ascending triangle. I was actually hoping is a four-letter word. Hope is a four-letter word in trading, right? We don't want to hope. But I was hoping that this dip here was going to be a little bit deeper for me to load up on some of my longs. So I never really got as heavy as I wanted to into this area. But now we've set up with this beautiful pattern. We're set to gap up above it. We're small extended to the upside again. So I don't want to be chasing this morning's gap. But overall, the technicals in the market here are looking tremendously bullish. We're basically at all-time highs. And what I've been telling my traders every morning in our morning game plan for our morning meeting, err on the side of the long side. Err on the side of the longs for anything that's more market correlated. A little bit different for some of the crazy stocks that we were already talking about. A little bit crazy, stocks up 200% in 2 weeks. It's not trading with the S&P, that's trading independently. So you can view that very differently from the market, but generally the market itself is one of the most important layers of probability. This is how we view probability as professional traders, right? Risk reward in trading is very simple, it's simple math. Probability is much more dynamic, it's much more difficult to define because there are so many things that affect whether or not a trade will work. One of the most important is the market itself. If I'm looking at buying Apple today and the market looks like higher, I'm going to have a higher probability of success than if I'm looking to buy Apple today and the market's trending down all day. That's just an example of a layer of probability. The NASDAQ, we were also talking about, so NASDAQ's been relatively weak compared to small in value. The question is it going to stay that way? I think November, I don't know if anybody read, it's December 1st today. There's all these crazy statistics from November. This past November, November 2020, was the best November for the S&P, I believe, in history. The XLE itself was up 30%. We saw a huge rotation into value. It may have been the biggest move for value in a 1 month period of time in history. And you can see that in your charts of the XLE. You can see that in your charts of the XLF. And you can see that in the IWM, whereas the Qs had rested. Now the question is value going to be able to keep that bid underneath it? Is that rotation going to continue? Or is tech going to start seeing a bid again soon? The whole thing here is interest rates. If interest rates can stay very low, that's bullish for tech. And it sounds like the Federal Reserve has said that they are not going to be increasing interest rates at any point over the course of the next 3 years. So even though we've seen these incredible moves from value, we saw some amazing mean reversion over the course of the last few months, particularly November, I do think that there is some sort of cap on that just because there is a cap on interest rates. And now we're seeing tech start to pick up. You have this amazing looking ascending triangle here in the Qs that basically has broken out today. As of right now, we're sitting on highs. A little bit concerned with the shorter term upside extension of what we're seeing right now. But I had been talking to my team regularly. We had never seen the FANG names so out of play as they were over the course of the last couple of months. Trading Apple, trading Amazon, trading Facebook, trading Microsoft. These had been basically dead money trades for the last few months. And all of a sudden we're starting to see some signals here where that's beginning to change. My team and I, we were all over Apple yesterday. We had identified the high of this negative Maribozu as a key spot for Apple to recapture in order to get back to being bullish. 117.63. A bunch of the team were purchasing in through that price yesterday. It's giving continuation today. It's starting to break out of this wedge. I have a long position in Apple. Some of it is actually initially from 104, I think, down on this day. And I've been adding to it. I recently, again, if people know me, I actually really don't like trading Amazon. I really don't like trading Amazon. I don't like stocks that are this expensive and are this thin and are this spready. I don't think that they're great trading vehicles. But I started to like Amazon really going back to this day right here. The pattern here was getting really tight, but we're coming into this holiday season. I mean, first of all, they got AWS, which is Amazon Web Services, and cloud is just, if they could break Amazon up, and that's a company in and of itself, that's the company that you really want to own. But, you know, coming into the holiday season here, coronavirus, everything that's going on, people aren't going to stores, people are going to be utilizing Amazon more than ever, and this pattern here, this wedge had just gotten so tight, it ended with an inside day, so we had spoken about getting long Amazon if it's able to get above 3140. So I do have an Amazon position now, and now what I want to see the next spot is 3,200 bucks. So Amazon's finally be coming back in play, Apple is finally coming back in play. One of my top traders, his idea of the day for the morning meeting today was Facebook 280. I struggle to be able to buy Facebook personally, even though I'm on Facebook and I'm on Instagram. I mean, the company is like, on the one hand, I feel like the company is like the devil itself, and on the other hand, I love logging in and seeing my cousin's little children and stuff and what's going on there, and I can't get myself to delete any of it. I just enjoy it too much. But it does refrain me from kind of buying Facebook as a stock a little bit, but I probably shouldn't be that way, right? Money's money and the stock is going to move as it will. 280 today was one of the trades of the day as a resistance breakout. 280 had actually been a level in this thing for months, even though it got a little bit sloppy here, and now really started making all these equal highs. So one of the ideas of the day was Facebook 280. Here's my 5-minute chart. It's a very simple trade. You just buy it through 280. Your out is the low of the day at that point. So you basically have $1 worth of risk. It's already given $8 worth of reward. It's just a phenomenal trade. One that I have a position in, I know it took a hit on earnings, is this Twitter. Twitter is starting to get into its gap. As it's holding above 45, it's starting to look significantly better as well. So it's another one that I got a position in, and I'm continuing to trade. Oh, how could I forget to talk about NEO? NEO, we had another couple capitulation trades in the stock today that we were able to take advantage of for shorter term day trades. If anybody remembers, a couple of weeks ago, I had gone over all of the day trading that I did in NEO on this Friday, which was an incredible day. We were trading it short, we were trading it long, we were taking scalping trades, we were taking longer term trades, we were looking for this pullback to equilibrium, then we were purchasing capitulation purchases on the way down. It was phenomenal. You can even see in here what I kind of did in NEO, a couple of capitulation trades. This first time here, massive capitulating volume into this area, placing bids out really kind of below this low and into this low from yesterday. Was the first spot we were looking for it to hold, just taking advantage of this extension. And then guess what? By here I'm all out. That's it. My green dots are buying, my red dots are selling. If you can't tell, I trade very actively. I'm a very active trader. A lot of what I like to do is have swing positions that I very actively day trade around. So, capitulation purchase there worked out really well. Second level of capitulation, got all out. Second level, because all you can look for, again, I know I'm jumping back and forth, all you can really look for into these degrees of capitulation is a retracement back to equilibrium, which is what? It's the space between your 8 and 21 EMA. And the stock was so weak that I wasn't even looking for a full move back to the 8 EMA. I just took this bounce to 49 bucks, bam, I was out. Second trade comes in, building into this capitulation again, even higher volume, exact same thing. You could just see selling all the way up here, basically into the 8 EMA, wipe my hands with it, I'm out. I was wanting one more trade. You can see it put in this low here at basically 46.06. I had all these bids in the $45. I really wanted another level of capitulation lower, the break of that 46, all the sell stops to trigger, and I want all those sell stops to fill me on the bid. Same thing, just looking for that upside capitulation, except then down into the $45 area, I would be looking for some stock for a little bit longer term of a hold. Whereas everything else I did in NEO was very short term, 15-minute trades at the most, taking advantage of the fast movements to capitulation. I love a stock like NEO because it's thick, but it can still move 10% at a time. The stocks that are thick, and this is the opposite of why I don't like trading Amazon, the stocks that are thick allow me to take a lot of tier size. All that tier size gives me a game planning advantage on how I want to be able to approach that. When it comes to Amazon, Amazon is so thin, so expensive, how much stock can I really take all at once? Not really as much. That limits me from a game planning ability. So that's kind of where things are with the market right now. They're still looking extremely bullish. I do have some things in the back of my mind, little yellow lights, little caution symbols in the back of my mind telling me the messages that we're getting from the money flow, the messages that we're getting from sentiment, it's a little overcooked. It's a little extreme right now, but that's just sitting there in the back of my mind. Because without a technical signal, a true technical signal, there's not much for me to do yet, except honestly be long. And I'm a little bit nervous to be adding very heavily to long positions because of those things that are in the back of my mind. But every morning I tell my traders, we've got to err on the side of the longs, err on the side of the bulls, because that's what the technicals are telling us. And if all of those things that are in the back of my mind do come to fruition, it'll show itself in the technicals at a certain point. We also have a seasonality effect right now that could also, help the market continue to the upside. So all of those things, we're keeping in mind, and the market is rightly very excited about these vaccines. I'm excited about the vaccines. As much as I've loved this year, traveling all across America, seeing everything that America has, I miss my home in New York City. I am hoping to get back there at some point. But honestly, I want to be able to get vaccinated. So we'll see how all these things play out. We'll see how the SPYs, which are looking bullish, play out. The Qs, which are looking phenomenally bullish. I mean, look, technically this ascending triangle pattern, I'm not predicting this by any means because patterns fail all the time. Technically, the break here that we're experiencing today tells us we should be getting moved to 340. 340 in the Qs, right? Technical continuation of this triangle is this low to basically $300, like this high, doubled. So you'd be looking for a move to 340. That'll be an incredible move. And that would obviously play out, probably not over the course of a day or a week, probably more like months. But until we get a signal, we got to err on the side of the longs. And I'm loving this market environment. My biggest fear right now is that the volatility is going to stop. Like, I want those crazy stocks that we talked about to be giving those 200% moves because there's so much opportunity in there. I want all this volatility, things getting extended to the upside, having massive price corrections all the way to the downside like we just saw in Palantir, like Tesla's move yesterday, because all of that breeds massive opportunity for what we are doing on a day-by-day basis. And my biggest fear, honestly, is that the market goes back to what it did in July and August, where we just had this slow grind. We can make money in these environments. You can be long, swing trades, and just ride that trend as we continue higher. That's fine, but it's just not as exciting. And if anybody was in my virtual trading floor listening to me trade NEO today, that's what I love. I'm whooping and hollering, and I'm excited. I'm yelling at my team that this is where I'm getting involved in NEO. This is how I'm managing my risk. This is the bounce I'm looking for into this area and why, and seeing how crazy these stocks are moving. And if you hear me banging my keys as I'm trading, I'm just getting so many orders into the marketplace so quickly, utilizing my hotkeys. I don't know how anybody uses point and click. It's 2020, not 1999, where you need to point and click to buy and sell stock. If you're an active professional trader, you got to have hotkeys built in. So you could just hear me pounding on my hotkeys as I'm heavily trading NEO, Tesla, Palantir, all these things that are really moving that I'm involved in. So that's it for today's update. Let's talk a little bit about prop trading and how you can potentially become part of the team. So T3 Trading Group is a FINRA registered broker-dealer. We have professional proprietary trading accounts. We also have retail accounts. We are, I believe, one of the largest, if not the largest, proprietary trading companies in the country. We have over 500 professionally licensed accounts. We have 6 offices. They're all closed right now. They're all on the East Coast. Even before the virus hit, probably 60-70% of our traders were remote to begin with. So getting everybody remote when the office is closed was really no big deal at all. Right now everybody's remote and things are actually working out really well. Again, we're registered with the SEC and we're a broker-dealer member of FINRA SIPC. What that means is all of our professional traders have to be licensed. Obviously, if you're opening a retail account with T3, which has the benefit of direct market access, most of these, if not all of these, commission-free brokers that are out there, they're commission-free. They're not free. they're selling your orders to HFT firms who are front running your orders and giving you worse pricing. If you have a retail account or a prop account with T3, you have direct market access. Yes, there's a commission cost. The commission cost, especially on the retail side, is extremely low, but now you don't have anybody front running your orders. So from my understanding, it's actually significantly cheaper to pay a small commission than it is to get your orders front run. But again, all of our traders who are professionals have to be licensed with an SIE, Security Industry Essentials, and Series 57 examinations. We'll sponsor you for the exams. We'll provide you with study materials through STC. You get textbook online classes, online practice tests, everything that you need to pass. And then you can become a professional trader with us. Once those examinations are passed, then you can get started. We have 3 different trading software options for our professional equity traders: Lightspeed, Sterling Trader Pro, and Wolverine, which is also known as WEX. On our retail side, it's only Sterling Trader Pro. They're all phenomenal professional platforms, by the way, with depth of market, direct market access. If guys don't know what a tape and what a level 2 looks like, here it is. Here's just the NASDAQ right now. Here's all the inside bids. Here's all the inside offers. Here's the actual tape itself, is all the transactions that are taking place. So I can choose, if I wanted to buy 100 shares of the Qs, I can choose, obviously, pricing, and I choose how I route it. Like, you know, I could place my order directly onto the NASDAQ or directly onto the New York Stock Exchange. And again, there's huge benefits that come with that, though there's also a learning curve. We have multiple asset classes. I'm equity focused, but if you have an interest in any of our asset classes, reach out to me and I can speak to you about it myself or put you in touch with the right person. Again, my focus is on equities, but we have equity options, we have futures, we have options on futures. Education and training is huge. It really is. And training and development is something that we take very seriously here at the firm. All of the traders that I'm working with, they get access to my training program. It lasts for about a month. They get free access to my virtual trading floor. It's called the Pro Desk. The reason why it's called the Pro Desk, it's where most of our pro traders are. I do a morning meeting every day in there through a screen share at 9 a.m. Eastern. I do an afternoon meeting Monday through Thursday at 10 after 4 through a screen share. We do a Q&A every day. Seriously, training and development is something that is super important. And if I didn't have good mentorship at different points in my career, which I got through T3, I would not be here today speaking to you guys. So reach out to me. You're not going to go it alone. Even my experienced traders, guys who are on my team, who are former fund managers, former floor traders, former pit traders, been doing this for decades. Even though my training program is primarily catered to newer traders, they get a lot out of it as well. Game planning for reward maximization, market psychology, how to trade IPOs. So again, basically just a different class each day for that first month or so that you're with us. Then account funding. So to be a professional trader, you're required to commit a capital contribution. We operate on a first loss system, so any initial losses that you take as a trader will deplete from your capital contribution before they could eat into any T3 money. What we're going to do on our end is we're going to provide you capital access, buying power, at 20 times your contribution for equity day trading, 8 times your contribution for overnight positions, and you'll get compensated through a profit split. So if someone comes in with a $50,000 capital contribution, we give them access to $1 million to work with. And we have experienced traders also. If you're an experienced trader and you want to come in with $2 million because you want access to $40 million, we can handle that as well. Again, T3's size, we have strong capital reserves. We're really able to work with people of all experience levels. From a brand new college graduate who's getting started small and is really reliant on our training and development, all the way to a seasoned veteran who's been involved in the business for decades and wants large amounts of capital access to implement his trading edge. Reach out. Again, here's my email address. Oh, and you get all this other great stuff. So again, you get my training program for free, which isn't even on here. I think that's like an $800 value. You get access to my virtual trading floor room called the Pro Desk, where I'm doing the morning and afternoon meeting each day. We get the news in there all the time. We get the large option order flow in there. It's a fantastic team. We're all feeding off of each other. You get access to Scott Redler, the Red Dog. Learned a ton from him over the course of my career. When our Manhattan office is able to be open, it's Redler and I. We're the ones who are running the trading floor there. So you get access to his virtual trading floor. You get access to Redler All Access. So, I mean, I don't know what you're waiting for. Reach out. Again, here's my email address. And seriously, reach out to me about anything. You want to talk about getting involved with T3 with a proper retail account? Go for it. Sorry about that. You want to talk to me about, just develop a relationship and talk about whatever. You like to ski? Anybody who likes to ski, you're out here in California, reach out to me. We can get a day in together. It's been a good start to the season. I'm pretty happy about it. I'm here in Tahoe until January 8th as of right now. So anyway, that's it for today. I am going to jump back into my trading. I hope that this webinar didn't cost me too much money, but reach out to me, and it's been a pleasure. I'll see everybody again next week. Good luck out there, and manage your risk. It's the most important part about the business. I tell my traders every day, manage your risk.